Hello, everybody, and welcome to the Dash Trader Newsroom. The market meltdown that wasn't. What actually happened with the trade tariffs? Let's jump into this. My name is Michael DeGioia. I'm the Director of Educational Services here at Dash Trader. I'm joined by Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well. Glad it's a 4-day week for those of us in equities.
Yeah, it's it. It is. And we got a day off tomorrow with the Good Friday holiday. So let's jump right in. So U.S. and China are now in a trade war. 2 weeks ago, there was tariffs across the board. Now we have 10% tariffs applied to most countries with a 90-day extension granted for reciprocal tariffs and giving more time for trade talks to continue. We have over 75 countries reportedly coming to Washington, D.C. to negotiate. I know Japan was actually in Washington in the last couple of days. How did we get to this point, Jill? And really, what actually happened? Because it's been a crazy 2 weeks.
It certainly has been. And Mike, you and I've, prior to me being in media, we've traded for a long time. We've been through the dot-com boom, 9/11, great financial crisis, debt issues, COVID. I can't recall a time where, and never mind VIX levels, but the velocity of the moves and the round tripping that we're seeing is, I don't
Insane.
recall anything like that. The fact that they kicked the can down the road 90 days, that warrant a 2,500 point move in the Dow? No. I think if anything, this is performative art, having 75 plus countries come to DC to negotiate this. 90 days is a long time. It's not that long of a time when typically it takes months, it could take a year to negotiate, long-standing trade agreements
Yeah.
and so forth. It's not, kissing the ring does not make, a trade agreement. It doesn't work like that. I think, longer term, our position in terms of being a trustworthy partner, whether you're talking about economic trade from a national security perspective, I think that's, I'm trying to be professional here, but I think it's been damaged in such a way that when we think about, okay, investing in emerging markets, the biggest risk was geopolitical risk. Our system is operating just like that. Like there is a geopolitical and structural risk in the US right now. So
Absolutely.
to see these moves in the market, to see the bond market expressing that, which is what I think lended to the administration dialing back on some of its trade rhetoric. And Mike, just because the 90 days come and go, cans might be kicked down the road. We have another 3.5 plus years of this. Is this going to be a tactic that's continuously applied? Are we going to, continue our policy strategy on Truth Social and social media? What if this was a national security issue, which it can be parlayed into, it's tariffs and trade at the end of the day. Our partners don't trust us. I mean, the Supreme Court, their rulings are being denied. And no one, there's the entire structure, the entire checks and balances that we have are just being completely ignored. And we'll get to Powell in just a moment. And I'm not trying to sound dramatic, but it makes it really difficult for companies to figure out their operating strategy in a volatile environment such as this. There's
Yeah.
no guidance or structure.
There's certainly a degree of gamification. You mentioned the bond market, and I think that, stock market's one thing, but bonds is big money. Like that's huge money. And I think that the really wholesale selling of U.S. Treasury bonds is what ultimately led to the Trump administration backing down and backing away. As we know that China holds a tremendous amount of U.S. debt. And when China started to dump U.S. debt and buy gold, apparently, because if you're dumping bonds, right, you got to put your money into something. And U.S. dollars going down as gold surged to all-time highs. So, it's pretty obvious what they were doing was buying gold with whatever they were selling in treasuries. So, that seems to be what actually happened. And this kind of I think that the best story that could be came up with from the I guess what I forget his name, the new finance minister, treasury secretary. I forget the new
Bissett?
U.S. treasury. What's his name?
Bissett, am I saying that right? Am I
Uh,
pronouncing it correctly?
yeah, I don't know which one it is, but I think that basically the best story that they
Bissett,
could come up,
Bissett, not Bissett, Bissett. Yep.
yeah, could come up with is that that this was to kind of single out China. But it seems to me like once the bonds started getting wholesale dumped and gold surging to new highs is when things kind of reversed and took a back step. I mean, does that also seem to jive true with what you've seen on the street?
So I would say let's take a step back here and explain why the bond market is getting the kind of attention that it does, because we typically talk in terms of equities and options and what we're seeing in the VIX. And the reason why the bond market is so key and what we're hearing about now is, a stock market decline. It's never pleasant, but stocks can fall without causing systemic damage. Nvidia with the $5 billion charge it's taking because of the shifted strategy of um, chip manufacturing and so forth. That's not systemic. It might hurt that particular sector. It might hurt Nvidia specifically. It could you could see how it moves through the stock market. Um, the bond market is not the stock market. It's about financial soundness. It's about liquidity. So when the bond market, if it gets bad enough that threatens banks and it disrupts the market for treasury securities, that could have forced the Fed to react, right?
Hmm.
A sell-off in stocks that threatens either the bond financial system or economic output. That's not the cause of
Yeah.
why the Fed will take any action. And it's a constant reminder that the market's not the economy is not the market, and the market is not part of the Fed's mandate. And I think it's important that everyone here understands that it didn't make it any easier for Powell, as ECB cut their rates for the seventh consecutive meeting, but it's the outlook specific to the Eurozone. It's forecasted to grow more quickly than the US economy, right? That's why, just because the ECB did it doesn't mean that the US has to.
Yeah.
You could even, ask the question, should you have cut 50 basis points after the election? Was it necessary? I mean, Mike, these are self-inflicted wounds. The
Yeah.
consumer was doing well. We were virtually at full employment.
Yeah.
While multiples were high in the stock market, companies were operating well, and their
Yeah.
fundamentals were good.
Yeah, it's definitely interesting. And that's the next item that we're talking about is that there's now tension between President Trump and Fed Chairman Powell. You and I have spoken about this.
Mhm.
The Federal Reserve is supposed to be independent of the executive branch and
Yes.
independent of the government in general. President Trump calls on the Fed to cut interest rates. Trump says that Fed Chairman Powell's termination can not come fast enough. Basically, I think that, Powell is doing the best he can do with the data that he has in the situation that he has. Basically, we're probably going to be dealing with some inflation, but to
Mhm.
preemptively cut before the inflation is actually there would be putting the cart in front of the horse. So I think from a political perspective, Powell, who's trying not to be political, is in a difficult political situation to be in. But at the same time, he's got his mandate and he's got to do his job. So, and his job, there really is no reason to cut
Mhm.
just yet, from that I can see. I mean,
Right. Well,
nothing
Mike,
really changed.
we have discussed this, I think, for every call that we've done for the past 2 years in a row, or well, a little bit
Yes.
less than that. When everyone was expecting 6 to 7 rate cuts to start 2024, it never happened. The market finished, at record all-time or near all-time highs. If you were to get 6, 7 rate cuts in a year, as the market rallied in December 2023, thinking that it was, there's a bigger issue with the economy. There's a reason why you're getting that amount of rate cuts. Um,
Yeah.
and I'm going to take a step back and not make digs here, but I think Powell has done, you know, a good job trying to keep outside of the political lane. He's been clear about the Fed's independence, and that has widely been supported and understood in
Mm-hmm.
Congress and in Washington, and that's really what matters. I think making threats like that, or talking about terminating um, the chairman of the Federal Reserve for Trump, who proclaims to be a master negotiator, I don't understand how this is impressive to anyone.
Yeah.
It doesn't feel like
Certainly
it's well
doesn't give
thought out.
confidence in the markets, right? Like if
Oh,
you're
it will.
saying
It
that the
will be,
chairman should be terminated, then you're not giving confidence in the
and if he
management of the
does
market.
get terminated, I can't even imagine what that type of reaction would be like. And again, it goes back to the bond market. If there's
Yeah.
no trust within the broader system, whether it's our banks, our economy, others are going to pull their their investments within our market out of the system.
Yeah.
Legally, I don't think it's something that the president has the authority to do, to to fire the Fed chair over
Yeah. No,
policy
it's not in
disagreement.
his. No.
Policy,
Yeah.
but this is how government is. You're supposed to have this kind of discourse. You're supposed to have policy differences to keep those checks and balances
Yep.
in place. Um,
Absolutely.
you know, the president nominates members to the central bank's board of governors. Congress has confirmed them. They typically serve longer terms. Um, so it's not like there was a unilateral decision to put Powell in place. You have to remember too, Mike, what happened in just 5 years of what Powell had to navigate. There was no roadmap for that.
Yeah.
We're still trying to figure out, what the economy, does look like moving forward from the pandemic environment, right? And then these are self-inflicted wounds. This inflation wouldn't be a concern if we weren't conducting policy this way. I don't. I
Yeah.
Look. There are many things that Trump has campaigned on, whether it's his first administration or this administration, that I think are great ideas. But it's the execution where the flaws continuously kick in. As far as I
Hmm.
know, I did an interesting exercise of using different generative AI platforms of aggregating when Trump spoke about tariffs in this manner, that he did not campaign on this. This did
Yeah.
not come up at the level of what he's trying to do now. He didn't campaign on this. I couldn't find anything on it. Yes, tariffs
Hmm.
were discussed, but not at these levels or this kind of
Yeah.
strategy. Nobody voted for this.
Yeah. It seems a little severe and certainly not the best exit. I mean, I would, I would say that this was a back down. It was almost a fold, right? I mean, from the way I look at it. I try to stay objective as a trader and just look at the volatility and the uncertainty that
Right.
it causes in the market. So at first it looked like almost like an April Fool's prank because it happened on April 2nd. He kept mentioning I didn't want to start it on April Fool's. It almost seemed like an April Fool's prank. It did single out China, which basically I believe that China's kind of quasi been at war with us anyway. So it did kind of single out, and then I see that the China decoupling with the debt. So this is actually kind of forced the decoupling of the U.S. and the Chinese economy. So in that regard, it did single out China, and it did but the collateral damage with the
Mhm.
confidence with all of the rest of the world, that to me seems to be the part that is most damaging for the United States, is that
Mhm.
we've kind of alienated what previously was our allies. When we kind of knew China was adversarial, we could have just focused on continued a China trade war versus
Yeah.
getting the entire world involved. That
So,
seems
so
to be the damage.
So there's a couple things to unpack here. One, um, it was always understood that we keep politics out of the market.
Yeah.
Even when things started to get more volatile, at the end of February, um, we even made a conservative effort to keep that out of our reporting as much as we can. You
Hmm.
cannot have a conversation without bringing it up. You can't ignore the elephant in the room that the end
Yeah.
game for the administration or the execution of it is not impacting the market. It's not impacting, our U.S. companies. We're almost forced to have to contend with it, which has been an interesting exercise. I think,
Yes.
to your point, longer term, not having trust or faith in the U.S. and you'll see other political and economic alliances start to unfold. I also think, returning manufacturing is one thing, and I don't even, in my mind, we should be focusing on looking forward. Manufacturing isn't going to bring us forward. There's other ways to reskill, retrain, and navigate the economy for things that are more relevant than manufacturing, right?
Hmm.
I We also have to recognize that for a lot of our technology hardware, more importantly, our defense and national security hardware, we need those minerals and rare earth materials from China. You can't. There is no way to produce that otherwise.
Yeah.
Um, and something interesting that I read too, I believe it was Axios. I'm sorry, I can't remember who it was. No, it wasn't. Who I could attribute it to, but carbon fiber is also sourced from there.
Wow.
What are golf clubs made of? Higher end golf
Yeah.
clubs. It
Yep.
could
Carbon
impact
fiber.
sports. What if it makes, racing vehicles more,
Hmm.
or it cuts down another time, or it impacts their ability to do well, or whatever it is. But it's interesting, like, if it starts to impact sports, particularly golf, which we know the administration's fond of, it's it's more broad than just bringing manufacturing back.
Yeah, no, absolutely. I just look at the collateral damage that it's kind of caused for confidence in the markets overall, and that's kind of the
Mhm.
more disconcerting part. And then, of course, we always talk about civil society and being civil and just respecting other people. There's kind of a little bit of a decrease in that for certain. That it seems like people are a little bit more adversarial. It could have been approached in a more or a less adversarial way, is my opinion. Is that, and it's just an opinion piece, because like as a trader, you're very, very keen on market sentiment. And from what I feel, in trading, is that there was like literally the bottom fell out, and over the course of one day, a day and a half, the bottom came back in, and it
Mhm.
it it felt extremely manipulated. As a trader, I could say that it felt extremely manipulated.
Well,
And
my
I think,
I'm sorry. Go ahead.
go ahead. No, go
Oh,
ahead.
I want to ask you a question. I had a fund manager on before who is more factor oriented, more quantitative oriented, and I'd asked the same question where when you see two, three, four standard deviation moves within the indexes. We know what's happening in the vol markets and so forth. When we see that these aren't orderly buy or sell programs, they're, to your point before, it feels manipulated. Do your levels work? Does your trading
Yeah.
strategy change?
It,
I mean, let's say, I can take every time I make 10% in a trade, I get out, round numbers. If I'm down by 5%, I get out. I just cut my losses. When the markets move this fast, are your levels
so the
yeah.
shocking thing is that the market came right down to the key support level, and it reversed exactly at that key support level, and it almost spent no time between key support level 2 and key support level 3. It like literally went down, fell all the way down to 3, and then surged back to 2, as if it didn't fall down to 3 at all, but it did. So it literally, the bottom fell out of the market for basically 2 days. And we basically, one day was the bottom falling out, the next day was the reversal, and then we kind of resumed trading back in levels that we hadn't traded in, for a month, basically.
Mhm.
It was almost like a complete anomaly. Very black swanish. And it was self-inflicted, which is, you know, that was kind of the unusual thing about it. I call it the market meltdown that wasn't, because like I had just done the newsletter and put in these key levels, and it came to those key levels, hit them, and then came back.
It's just surprising to me, and I will be the first to admit I was 100% wrong, or I interpreted it wrong. And I've said it on here, I've said it on my show. I think part of the exuberance prior to the volatility we're feeling now is, you know, Trump 1.0 benched his performance on the
On the stock
economy
market.
and the
Yeah.
stock market. And I went in thinking, he wants to be number one as it relates to the stock market, the economy, number one in innovation, number one in digital asset leadership, and so forth. And clearly I was mistaken. And I'm sure I wasn't the only one, but because it was such a big part of the narrative of his first administration, this was quite shocking to me. And I
Yeah.
don't think the market was prepared for it.
No, I think the market had different expectations because this. I mean, I've heard a number of different administration officials coming out just saying this is about Main Street, this is about bringing manufacturing back to America, and I do think that there is a legitimate, a legitimate attempt to kind of play to the base that voted President Trump in. So I do think that that's a legitimate attempt. But again, it seems like bringing manufacturing back to the United States is the push here, and that this is a push for Main Street, or at least that's the way it's being spun. That's the way I read it. I mean,
Mhm.
being as that I live in New York City and pretty much have a New York City kind of view on things, but it seems like it's being pushed towards the Rust Belt, not to be the Rust Belt anymore. That's how I can take it.
Well, I
So,
mean, if you have a retirement count, it doesn't matter where you are. If you're doing
well,
retirement,
yeah,
it's
but yeah, certainly, yeah, it's
yeah,
certainly not going to feel that way, right?
yeah.
So, on that note, well,
Anyway,
listen, I want to wish you a very, very happy Easter. And if you've
same to
already
you.
celebrated Passover, anybody else, I wish everybody a happy holiday. And thank you so much as
Thank
always,
you.
Jill. See you
All
next
right, take
time.
care, guys. See ya.
Bye bye. All right, so here we are. We're going to take a look at the markets a few minutes before the market closes here. Let's take a look at some of the major indices. So here I'm going to just put on this is Google. Okay, I'm going to bring up the QQQ. Google so you could see the QQQ. This was the main level right here, which was at 425 was the level that I thought that the market would get to. It did take it out. It came all the way down to 400 and then snapped back to the moving averages. The question is do we continue to sell off or do we rally from here? And if we look at the SPY, similar pattern. This was the support level at 510. We got all the way down to 480 at the low, but then snapped back. Let's take a look at Amazon AMZN. Amazon basically back down to support level. Amazon being a little bit more bullish than the other indices. Apple as well kind of broke the floor, broke down to 170, snapped back up to 210, but now is trading at the 196 level. TSLA, Tesla really not doing any much. Actually, might potentially be forming a low base. But Tesla pretty much giving up the entire bubble that was the post-election rally. Let's take a look at MSFT. Microsoft had been generally weaker and in a downtrend, and that continues to go that way. NFLX, rounding off, let's see, NFLX. Netflix holding up better. Netflix was relatively stronger than the markets, and it continues to be relatively stronger than the markets. NVDA, NVIDIA, which was the leader in AI, pretty much at the bottom of its range. So fantastic. I'm just going to bring our slides back up. Here we are. We just did our market analysis. I would say that the market has cracked. So I think that we are no longer in a bull market. I don't think we are in a bear market. We did get to bear market territory and snapped back. On that note, I would stay cautious and trade carefully because volatility is going to continue because these negotiations are not over. So the market will react each day to each negotiation update. Stay up to date with all things DAS by signing up to our monthly newsletter, simply filling out the form at the bottom of our website, www.dastradertv.com. Subscribe to our YouTube channel, Dash Trader TV and Dash Newsroom Reminders. Follow us on social media. That is LinkedIn, Twitter, Facebook, and Instagram. Trade well, everybody, and talk to you in a couple of weeks.